Stock markets have been one of the most celebrated avenues of investment, of research, of being a proxy of the overall economic affairs of a country. In spite of the fact that there is a lot of speculation, betting kind of activities going on there, have always been supported as fundamental driven based on knowledge, research, and the true worth of the scripts. Once in a while, we find the shenanigans of a few players who want to game the system, but at the end of it, caught by the overall wisdom of a large number of stakeholders and the player ecosystem, which originally had mostly brokers and the investors, have now mutual funds, insurance companies, bank treasuries, foreign institutional investors, and the play which comes because of the types of instrument that are there in the share market, and the blend of the debt instruments with the equity instruments have made it very interesting. In the last few days, the Indian stock market, like many other stock markets, have been on a little bit of turmoil. The common investor is always guided by greed or fear, as is famously told. But as once Warren Buffett told, the mantra in the stock market is be fearful when others are greedy and be greedy when others are fearful. Currently, the market is definitely showing signs of some weakness. Whether it is a good time to invest. Timing of the market has been researched and has been debated, has been lectured over a period of time, but no one has found the right algorithm to time the market. Because of this, instruments like systematic investment plan so that over a period of time you invest in different phases of the cycle and beat the market. At this point in time, when Indian stock markets are having a downward correction, I strongly believe that it is time to not only stay invested, but also to provide some amount of breadth and depth to your investments in the stock market. Why do I say so? As I told you, my horizon has never been short-term investing, either in my own personal investment or the investment advice that I provided to friends and people, but it is mostly fundamental driven. The inflation and the interest rate, both, I believe, have seen their peaks. As inflation eases, interest rates have to come down, and both have remained within the target range of 3 to 6% as given by RBI. That shows that the company's interest burden will flatten and the companies will pose higher profitability, providing greater return to the investor. Institution after institutions are now predicting that the Indian GDP story is not only intact, but it is likely to be one of the few economies in the world where the growth is likely to touch 9 to 10% in nominal GDP over a period of time. This again will boost market sentiments, and if you are a long-term investor, the time is to invest in good script which reflect the economy, specifically larger stocks. In the financial year 22, initial indications show valuation multiples of the earnings of corporates is in a healthy range, around 20 times the earning. 20 times an earning gives roughly around a 5% first year kind of return. As the profits grow, the current valuation of 18 to 20 multiple will constantly climb down. Government's developmental spending is likely to increase because the GST mobilization as well as tax revenue both are showing very, very healthy kind of a growth, and direct and indirect gross collections have been exceeding the annual budgeted targets for some time now and is likely to do so. So as a result, I think government and government dependent sectors such as rural sector, the agriculture sector, the cooperative sector, all these are likely to benefit and provide not only consumer demand increase, but at the same time also the future sustainability of the demand. All these makes me believe that the stock market, which is corrected because of the global pressures of oil price and many other factors, are likely to be beneficial for longer term investors. However, please take your own advice, apply your own mind. The long term view must not only be anchored in fundamentals, it should be anchored in economy, it should be anchored on the social and political economy together. Thank you very much.